So today I want to share my thoughts about Duolingo stock after they reported their Q3 earnings this past Wednesday. And I kind of just wanted to share why I think this earnings report reaffirmed for me why I think this is an amazing buy for the short term and the long term. If you look at the chart for Duolingo, it honestly doesn't look too pretty. They initially, since they went public in 2021, they were kind of stable and they rose up all the way to highs of 550. And I made videos in the past talking about how they actually saw a huge drop from 550 to around these 300 levels. You look at the 1-year chart here. That was mostly due to people thinking or investors fearing that AI would take over the language learning, model or idea. People would just be using ChatGPT for translations and learning languages would kind of become irrelevant. So that kind of is what triggered that initial drop from 550 to 300. And I made a video talking about how this earnings, I think, could really cement why Duolingo is an amazing investment for the future. And I think it did just that, but the stock definitely did not react that way. The investors, I think, had a huge overreaction to these earnings. You look at the 5-day chart, we had a huge drop here after earnings release from around 260 all the way to even lows of 185, and we rebounded a little bit on Friday back to the 200 levels. But, I am not worried whatsoever about this drop. Obviously, it's, a little annoying if you're invested in Duolingo and you see this huge drop because it's not just going to immediately rise back up to the 300 levels. It will take time. But I think this is now at a price where you can very confidently say that this will return great over the next couple months, years, and I think this is just a great long-term pick. So you look specifically in the earnings, and they reported amazing earnings. It definitely was not, lackluster earnings. They didn't miss estimates really, except for a couple key points, which I'll talk about. But revenues grew and beat estimates grew 41% year over year, beat estimates of 260 million at 272 million. So that's great. Net income also grew to 292 million, which is not something to be expecting. Analysts were expecting around 70 million, which it blew out of the park because of a one-time tax benefit. So don't expect a $292 million net income every time, but that's great to see. Now they have a little extra cash on hand. And also they boosted their guidance, which is, also what investors love seeing. Above estimates. So really on just a base perspective, they really blew their earnings out of the park. But there was one really underlying thing that had investors a little worried, and that's really what I think triggered this huge sell-off you saw on Thursday, and that was their bookings and their booking guidance for Q4. They lowered their booking guidance to slightly below estimates. It's just a couple percentages below estimates. So you see here around 330 million is what they guide for Q4, and that's below 344 million estimates. And, if they just reported that, said whatever, maybe it's a little bit of a soft quarter, but they didn't. They actually had a reason for it, which I think is what caused the huge sell-off. And it's that they talked about how they were going to prioritize user growth in the future. And basically what they explained that meant is that they have to make a bunch of decisions very often. So like, for example, they have energy points. Each user has 25 energy points. One energy point coincides to one exercise you can do. And once you run out of those energy points, you either have to pay for more by buying the premium version, or you just can't use the app for the rest of the day. So, how did they come up with the 25 energy points that they give users? Well, they have to think about trade-offs. If they give users only 24 energy points, you're going to end up making probably more money because you're going to have more people pay for more energy points, but you're also maybe going to lose some users because people are just going to end up quitting the app because they're going to say, oh, well, 24 isn't enough. So those are the types of trade-offs they're going to have to make, and they've been making them all along since this app has begun. But this earnings, they highlighted especially that they're going to start focusing on user growth when they are making those trade-offs. So they're going to choose to have 25 energy points over 24 pretty much every time because they could care more about the user growth that comes with keeping 25 over the extra money they're going to make with 24, if that makes sense. So that's really what I think caused this huge sell-off. But I think that's really a great thing because they were talking about how there's really a ton of opportunity ahead to grow the user base of Duolingo. They talked about how chess is a huge thing now with Duolingo. They just launched their chess course. They're going to launch player versus player chess too, which is something that I'm actually really excited for. They also have math courses and music courses. So that is really only going to flourish if you do prioritize user growth, because just prioritizing money, you're not going to get the users to help those new features out. So I really do like this strategic change that they're seeing. And, really, it's going to obviously affect financials a little bit, but like, I think it is very overblown, the sell off. We saw almost a 40% sell-off really in the last like month or so, and that's really just because of this tiny miss for guidance of bookings, which is really like net at your like revenue or whatever. But I think it is really overdone, and I think at this price of 200, you now have a price to earnings ratio hovering around 80 right now. In the future, it's probably going to be around the forward price to earnings, probably around 60 or even maybe 55, which is very low, I think, for a growing company like Duolingo with 40% year-over-year returns. Growth returns in the revenues and net income. So this, I think, is a very attractive price point at 200. I could easily see it. They were at 550 just a couple months ago, and that was on worse financials. It was just before that strategic shift was announced, but they were talking about how they were already implementing that strategic shift. They just weren't fully telling investors about it. So I think it's overdone how much investors think this is going to affect anything. It really isn't going to hurt financials that much. It'll just lower them slightly, but I think in the long run, that user growth that they're prioritizing is going to end up paying off hugely. And they really are taking advantage of AI. They talked about how their AI is very profitable now, and that AI is only going to be useful if you get more users in. The money doesn't really matter with that. So I really do like Duolingo about 5 times more now that it dropped from 300 to 200. I think this is a very attractive price point. I don't see it dropping much more. Maybe it just hovers around 200 levels for a couple days or weeks before it really starts picking up again. I think investors are going to start to realize that this company is steadily growing their revenues and net incomes at insane rates. And now they're prioritizing user growth, which is really just another piece of the puzzle that can really accelerate their revenues and net incomes in the era of AI, where they're using AI every single day to help build their app and kind of scale it. So this is one of my favorite picks now after this drop. If you were invested at 260 or 300, I would not be worried. I'd stay or buy more. And if you aren't invested, I think this is an amazing investment now, especially in the age of, these overdone AI companies who aren't really growing. They're just based on hype. Now you have Duolingo here, who's got rapidly growing revenues and net income at only 10 billion market cap and a price to earnings of probably around 60 in the future. So this is one of my favorite picks now. I'm going to consider investing myself. I was kind of just looking at it before. And let me know in the comments what you think about Duolingo, if you think it's a solid pick, or if you're maybe going to stay away from it. If you like this video and the rest of my videos, please consider subscribing. And yeah, I'll see you next week.